Chapter 10, Discovering the Stock Market. Where you go to look at stocks really does not matter too much as long as you can get the information and the charts you need. We'll talk more about the different types of stock charts and key statistics in Chapter 11 and 15. Yahoo Finance is great for researching stocks because they give you all the tools you need to analyze any stock for any type of trading for free. All through the online Yahoo Finance website and mobile Yahoo Finance application. However, you cannot enter and exit positions directly through Yahoo Finance unless you link a real brokerage account to your Yahoo Finance account. We will talk more about brokerages in Chapter 37. For the rest of this book, we will use Yahoo Finance to develop our stock trading skills. Let's pull up a company on Yahoo Finance and look at the initial basics of stock research. Nike Inc., ticker NKE. We see NYSE delayed price, currency in USD. There's a little add to watch list button, and then it shows the $80.50 price at close on August 8th, 2018 at 4:01 p.m. Eastern Time. And then we can see the price change in pennies is 3 cents down, and the price change is 0.04% down. And we also see the pre-market movement at 8:50 a.m. on the following day, which is 0%, $0. To find the stock, we can simply type the company's full name in, Nike Inc., or we can type the company's ticker, NKE, without the dollar sign. In Yahoo Finance's search bar, all publicly traded companies have tickers to represent their company in a shorter, unique way. It's much easier for you to type in CPB for Campbell Soup Company rather than the full company name. You will learn companies' tickers over time once you start researching them. Remember, these tickers help significantly speed up stock research and short-term trading by keeping you moving between different stocks rapidly. The previous snippet was taken during pre-market trading hours. In a live market day, the price of NKE changes constantly because the value of the stock is the last price an order or transaction occurred at. For Nike, $80.50 is what the last person paid to buy one share of Nike Inc. on August 8, just before the market closed. Next to a company's price per share, you'll see a price change in dollars and a price change in percent change. The price change in dollars shows how much a stock has moved from the last trading day's closing price. For Nike, the price per share went down 3 cents on August 8th compared to August 7th. Next to the daily dollar price change, you can see the percent change for the day, calculated using the company's per share price and dollar movement. We can see that the 3-cent decline in Nike Inc.'s share price brought the value of Nike stock down 0.04% from the prior close. A minute change. You should care more about percent change than dollar price movements in the long run because percent change lets you compare stock performance directly to one another. I would love to invest $20 in a stock that could go up $10, but I might care less in the short term about a $400 stock that could rally $10. Stock price change does matter less than percent changes when you make trades because you can just buy as many shares in a company as you want to reach your desired position value. Your percent change will dictate how well your position performs compared to the overall market. Focus on percent changes and your overall trading discipline and subsequent returns ought improve. Judging positions based on percent change rather than price movement also helps you become a better trader once you start managing more money because you'll be psychologically conditioned to only look at percent changes instead of viewing your positions as money lost or money gained. By taking emotion out of your head and looking at percent changes in an overall position, you'll have a much easier time looking at specific price targets based on facts rather than emotions. Disconnecting yourself from trades is key to extremely strong active management performance. Remember, you want to consistent gains in your portfolio over the long run. Never limit yourself to X much money per year when your account starts growing. Fight for higher percent returns rather than settling for lower percent returns with higher cash value if possible. Here's a refresher image of Nike's quote in case you forgot what we were talking about. This snippet was taken at 8:50 a.m. The stock market opens every business day at 9:30 in the morning Eastern Standard Time, New York, and it closes at 4 o'clock Eastern Standard Time. Right after the 9:30 opening bell is usually the most volatile period for the trading day. This volatility sets the tone for the rest of the trading day by around 10 o'clock, depending on whether the market moves up or down. Pre-market trading occurs before 9:30, and after hours trading takes place after 4 o'clock. Trading outside of market hours is possible through some brokerage accounts, which take extra time and effort to set up. With these accounts, you can submit orders outside of the trading day just like normal orders. However, after hours and pre-market trading usually carries much less liquidity than normal hours because of significantly less trading volume than normal hours. This lack of volume also causes much larger bid-ask spreads, which hurts your ability to enter and exit positions at good prices. We will talk more about the bid-ask spread in Chapter 15. Since comparatively few people trade outside of market hours, stocks do not generally change prices too much after they close for the day. However, news, earnings reports, and other catalysts can all cause large movements in pre-market stock prices, since these can come out at any time of the day, triggering buyers and sellers to enter or exit positions as soon as possible. Large pre-market movements are especially good indicators for even bigger movement potential in the following trading day. These movements, combined with the individual volatility when market first opens at 9:30, create stellar opportunities for 9 to noon active traders. As a long-term investor, you can expect to see large pre-market movements in your position every once in a while when large news comes out about a company you invest in. These movements will generally carry into your normal day's gains and losses as if the stock moved during trading hours. Every quarter, public companies release their financials to the public, and you may see large price movements depending on whether a company beat or missed a predicted earnings expectation, subscriber projection, etc. Additionally, companies release larger annual reports at the end of each business year, which may not be the calendar year, that go into more detail about their operations, strategic growth, and future outlooks, among other things. Reading a company's annual report will give you superb insight into their potential performance, and reading quarterly reports will help you continually understand a company's financials. We will look more at companies' annual reports in Chapter 23.